Good morning, everyone. Trump has said no to Iran's proposals and demands, and we're going to be in some interesting times. It is 11th of May, 2026. It is 9:28 a.m. Yes, we are starting a little bit early, but I want you to see what basically is happening. So we just came out of the weekend, Mother's Day is good. And Trump has said no to Iran's proposal. And that was, Iran's not going to negotiate from weakness. We understand that. However, Trump is just going to be talking and sending out tweets. So the market is going to be reacting. Just want to get you guys caught up before things start to kick off. So it's 9:28. It's going to be opening bell soon. Current P&L is negative 52.27%. And that's just basically $320 down. And that's okay because that's going to change. These are not the actual numbers for the stocks themselves. It's or the options really. And let's take a look. So Trump said no. That means that the risk is now on growth stocks, and basically the peace rally is pretty much over. We're going to be looking at oil and gold going up because people are going to start to really realize, and I've said this for a few days now, you're going to realize that things are not what they seem, and things are going to continue for a longer period of time than we actually expect. Not me, because I've studied both sides. I understand both sides, and that's why I'm going to be trading the way I do. It's 9:29 a.m. So let's take a look here. Synovus oil 38.84. That was its last, gapping up to 39.60. Seabridge is basically one of the stocks I have as well. Options 42.75 close, basically opening at even. Market's going to be opening soon. CNQ 60.89, gapping up to 61.59, and we're off. And just like that, everything has changed. I'm down $30. Not bad. Not bad. And now I'm down $170. Not bad. Not bad. Still doing pretty terrible, you know what I mean? But that is everything that's going on. So what am I looking for? I'm looking for CLS. I'm looking for those trades that I couldn't put on last week. Now for this one, CLS, basically AI, I was going to put an order when it was at 524. It went to 512. I realized we are getting very, very close to that 500 mark. We're probably going to be testing it soon, and it looks like it's basically going there. So I am going to try and get an order in again. Most likely won't happen, but I am going to try because I love setting orders so low that I don't get triggered. And if I do get triggered, it's in such a good position that I can basically profit no matter what. Basically, the stock was down 20%. I can buy it. Mind you, this is a huge, huge price. I'm not going to be able to buy it. So it's one of those premium play only. Same with HUT. HUT is one of those stocks that just skyrocketed. People are going to be taking profits. I'm taking profits. It's fine. I'm not going to say no. PAS, that's silver. That's basically gapped up as well. It's going on a trip north. And let's see, like I said, Seabridge is doing pretty well. CCO, that's basically a play on uranium. It's more of a longer term play because people are going to need uranium. It's like this is not going to end very well for any of us. So let's see, EFR is another one that I'm going to probably get back into. I'm looking at a 27 price. I'm going to wait for it to just drop a little bit more. I'm not in a hurry. Never be in a hurry. Let the market come to you. That's my motto. Otherwise you get a big loss. Currently my open P&L is at 70%. Sorry, it's not 70%. $70, 23% down. What does this mean for me? The market's just breathing. It's just going breathing, in and out. No big deal. No big deal. I did close my tech and FM positions last week. Made some profit. It was delicious. HUT and CLS, they're looking like they're under some pressure, but they might be recovering. They might just be recovering. Who knows? The range is fairly wide, so it's kind of there's news for CCO, and I didn't even actually read it. Okay, I'm gonna go and take a look at that later. And I wouldn't do it now. BN, I did their earnings is coming up on the 14th. I did close that position just because I wasn't going to make much money. However, I got to actually make my profit target. So basically I sold it so that I got a total credit of $80, which actually better than what I expected because I sold that put for 79 times 2 contracts, and of course I wanted to get at least 79 cents back for the contract, and I ended up getting 80 instead for all of it, you know. So I did make some cash out of that, basically a wash at this point in time. Made some money from the put side, and I made some money on the call side. Bought and sold, no big deal. So now I have a lot of real-time buying power, basically released, ready for it to be deployed. Seabridge, I'm going to be looking to close that actually pretty soon, because we're getting close to my, actually we are at target. So let's you know what, let's see if we can do that now. So basically it's 190 to 200. What should I set my target price? Probably 95. That's basically what I wouldn't mind selling it for. It's like, I mean, the stock is going on a rip right now. The let's see here, the bid and ask is 70. So bid is 70, ask is $1. It's $1. Let's see what Seabridge is doing. It's at 44.51. 451. Low is 43.22. So it's near its high. Perfect time to sell. I'm gonna go, and it's a 30-cent wide right now. It's a 70 bid. Ask us $1. Excuse me. So I'm probably gonna go and do 90. We're gonna do 90, and then I'm gonna change it depending on how much the market basically moves. So it's at its high still. Right now I'm looking at getting some profit. So basically paying 170. Let's see if I can send that order and get filled. Not likely. We'll see. Somebody is bound to take it, and it sold. 85 cents, $220 of cash. Basically zero, because CCO is not doing too good. But that's closed. Made my 50% profit. No big deal. No big deal. I'm doing okay. I don't want to get too excited over things, because you start making mistakes. You know, you start saying, "Oh, I'm a genius." Oh, speaking about genius, oh, CLS is up at 5.16. So it looks like the $5 is being basically rejected. That's a good sign. It's a very good sign. It means that right now people are basically going to start supporting it around $5. So I would most likely put a order at either 400 or 380, 390, that area. Probably make a, you know, $8 or something like that. So basically close it at $4, 50% profit. I'm gonna go and look and see if I can get an order in for this price, and especially since I have more capital available, I'll probably do HUT, although I kind of don't want to right now because it's not going down as far as I think it should. EFR is another one that I wouldn't mind getting into, and you know, CCO is just doing its thing. It's a whatever right now, so it should basically go back up, and it looks like it is. Not gonna lie, it's a low of 155, high of 157.40. I want to actually talk more about emotions, because you guys just saw me, you know, basically get all excited and then calm myself down. I simmer down a little. So basically, I have a video on this, but I don't want to be super confident, because I'll start thinking that I can predict the market, and nobody can predict the market. You can only make educated guesses, and that's the best anybody can do. And it's all based on, you know, the research that you do. Some people use charts, some people use fundamental analysis, technical analysis, a mixture of both. It all depends on the person. Some people use news and, you know, global, and you know, it's basically what I use what is available to me. And if there's something going on in the world, I want to be privy to that. So that's basically one of those things. Also knowing, like, one of the reasons I have such a decent portfolio, especially with my tax-free accounts, I bought a lot of my stock back in the 2020s, 2021, and that was just because the market cratered. I knew about basically viruses and stuff, so I was able to determine how long it would take to get everything back to normal, because, you know, we've had pandemics in the past, we've had viruses in the past. Spanish flu comes to mind. So I know roughly the amount of time that it would take for society to recover and, you know, get back to normal. Remember SARS, bird flu, all that good stuff. well, not really good stuff, but stuff like that. So because I knew that, because I was able to process that faster than most people, I was capable of taking advantage of the huge dip, which basically people will panic first, and then they'll come to their senses, and then they'll realize that they threw the baby out with the bathwater. And if you guys don't know that reference, you should do some research. If you do actually know that reference, go ahead and post it down below and say, yes, I know, the baby with the bathwater, crazy stuff. Let other people know that you know what's going on. So right now, I'm looking for HUT and CLS, which CLS is already recovering from its low. It most likely will recover, not recover, return and revisit that low to see what's going on. Low volume though, it's only 22,000 shares. HUT, 30,000 shares. So any time there's low volume, I would be very, very careful, because when there's low volume, it's very easy to manipulate a stock. When there's a lot of volume, it's very, very difficult for anybody to move the needle very much, which is why a lot of professionals, they prefer to trade stocks that are always, always, always fully liquid, people always in and out, no big deal. But if you go to a stock that has very low float, very low liquidity, anything you do can affect it. Anything anybody else does can affect it, and that's no good, because manipulation is not good for the business. Okay, so let's see. BN is actually retreating a little. Like I said, earnings is coming up. Silver's going down a little. Well, not going down, going up a little. Like it's basically the stocks that I would normally get into. I am surprised that tech and FM are actually up, because these depend on manufacturing. It depends on a good economy. But we have also oil going up, and we also have gold going up. So the market is very conflicted. If anything, it's trying to hedge, and this is why. So people are basically saying, hey, you know what? Even though we have this, inflation, stagflation, we're gonna get out of it. Totally agree. When that happens, though, I cannot tell you, but it will happen, because wars, they just don't run forever. Uh, like even the 100 Years War wasn't even 100 years. Anyhow, so we have basically copper, and that's probably something that's going up, is because of the AI boom. They're going to need copper for new power lines. They're going to need copper for cooling. They're going to need copper for basically anything that has to do with technology. Uh, with regards to EFR and CCO, which are both uranium plays, I'm kind of surprised that they're down, but it's okay. Once we get a peace deal, these guys should go up, just because people are going to start, investing into longer term projects, uranium, get some good nuclear power and stuff. It's nice and clean and doesn't rely on, the Middle East kind of thing. Synovus is up, and I already mentioned that, because, the war premium's basically back on. Same with CNQ, another one of those plays that I would put in, just to keep basically the cost of oil working for you. Then we have NXE, AG, and Seabridge. These are miners for gold and silver. So for them, I definitely can see why they're going up. And it's because, well, let's face it, the market's a bit spooked. They're looking at inflation worries. They're looking at things that might happen in the future, and they want to have a hedge. So a lot of inflows and outflows, everything's basically being rebalanced. We eventually may see a sell in May and go away type of mentality. But usually what that means, and we may have actually experienced some of it last week, usually that means that the markets will flow funds from one to the other, from one stock to another, or one type of stock to another. So basically from the growth stocks and, speculative stocks to more stable stocks, something that pays more of a dividend and that kind of stuff. And some people might say, oh, dividend stock they're no good, it's bad for you, like it's basically like a crutch. Look, you get paid from a company that's already mature. It's great. It's still investing, they still make money. And if you don't think that, then you probably haven't been in the game for that long, or you're a very successful trader, in which case, why are you even watching this channel? So it's not for the pros, okay? I'm not here to tell you about high frequency trading or anything like that. I'm basically showing you guys what I do. and what I prefer to look at when it comes to trading. And I'm more of a macro kind of guy, and then I condense it down to how I can take advantage of it and what opportunities the market's giving me. So it's kind of like a tiered process, which is why I don't normally trade during the market open. Just basically been talking to you. 9:44 a.m. I did put in that trade because, well, let's face it, once you hit your profit target, you hit your profit target, and just take your money and go. And right now, I probably could have squeezed out a little bit more money, and that's something that I'm going to talk to you guys about. Is it good to go right to the bottom and buy, and then wait for the market to go all the way to the top and then buy? Looking for the peaks and the valleys. Unfortunately, I don't gamble like that. I'm not a gambler. I don't care about the tops and I don't care about the bottoms. What I care about is everything in between. That delicious sandwich. Okay, so the meaty parts. Why do I care about the peaks and valleys? Because pigs, pigs make good bacon. You know what I mean? You're not gonna do yourself any favors if you hold out for the last eighth or last 5%. It's there's no profit in it. You're just having a lot of risk and then getting stopped out or getting whipsawed. So I don't look for tops. I don't look for bottoms. I look for overextensions. I look for basically oversold, overbought, that kind of stuff. Basically, the market exhausting itself in one way or another. And I'm a value hunter, so I go and hunt for value. Good companies are on sale. Nothing's really changed. The market's gonna change eventually, but political this, political that, and economics this, economics that. So I'm looking at everything, but I'm not looking for the tops and I'm not looking for the bottoms. A lot of people will say the market's going to crash. The markets will eventually have a crash. It's happened before, it will happen again. It's one of those things, but I'm not going to let them scare me out of the market because, as you can see, there is definitely opportunities out there. And if you let somebody basically say, "Oh, hey, don't trade because the market's going to go down," if you're selling, you're at a loss right now. You're at a steep loss because the market's basically going higher. So what are we doing here? You know what I mean? It's not about timing the market. It's about having time in the market. That's really, really important. As you can see, like, even if you go back, like, basically for a week, and you see some of my trades, you'll see that I've been deep in the red, especially for March, February, deep in the red, super red. But I've closed all my positions out for a profit. Not all of them. Some of them, like for example, I did get assigned for BN and BAM. I got assigned for my puts, which is totally fine because then I ran the wheel and then I closed those out, both of them at a profit. I got to keep the premium from the put that I sold. I unfortunately had to buy the stock, which is good because stocks that I wouldn't mind owning. And then I sold a covered call, basically, just selling what I just bought. And then I closed out for a profit. So for me, that's win-win. Somebody got their insurance, they got to basically use it, and they're probably feeling nice and happy that they, mitigated their losses. Meanwhile, I'm here laughing because I made money because I'm more patient. So that's what it is. Now the market looks very, very up at this point in time. HUT has recovered. CLS is recovering. It's gone from 507 to 524. Right now it's at 513. So that means basically the market's starting to settle down, and it's 9:47 a.m., which is basically around the time that it usually does that. My open P&L is negative 80, so things are starting to look up. CCO is slightly up. It should continue on that trend. EFR has also recovered a little bit. Just to let you know, perfect time for this disclaimer. You saw there I had a loss. Speaking about losses, just remember the purpose of this video is just to document my investments. Don't copy my trades. This is just for entertainment. It's not financial advice. Doesn't replace financial advice because I don't know you. Investing is very, very, very tricky. It's very, it's very risky. But with risks, there do come rewards. But speak with a financial advisor because they will know your personal situation. They'll be able to talk to you. They'll be able to advise you, give you information that you may not have thought about. Don't listen to it, some random guy on YouTube. Just look at my losses and be like, hey, that guy's a loser. Okay, just put it down there. Hey, this guy has a loss. Why am I even listening to this guy? even though he closed a profit of 220. What kind of guy does that? Well, I do. Okay, I have a profit. So open P&L 70 doesn't matter. Close P&L, that's what matters to me, because it's not a loss until you close it. It's not a profit until it's yours. And having said that, if I was to start all over again, I would basically start similar, but I'd probably do more long-term investing, right? Just like I've done in the past, basically buy and hold. Maybe sell some covered calls once I have 100 shares and I'm a little bit in profit. But one of those things that I would tell myself is take your profit, take some money out, take $20 out, take $50 out of your profit, take it out, hold it in your hand, okay? Because then it becomes real. It's not just a number, okay? It's not just a number on the actual screen. It's something that you're holding. And then you'll start to realize, okay, I can do this if I follow my plan. But more importantly, you'll realize that it's not just numbers on the screen, it's money. And it's money that you can take out, it's money that you can use. And look, that can change you, because if you're just looking at, just numbers on the screen, hey, they're just numbers on the screen. It's just a high score. For me, this is cash that I have in my account. I do withdraw money from this account. I use it to pay some of my bills. Eventually, I would like to have this replace basically income, so I wouldn't have to work or anything like that. That would be great. Basically, edging towards that. I'm starting to realize that, one, I can do this. Two, I'm fairly consistent. Trust me, there's times when you don't become consistent. You just think that you're better than you are. So that's just a warning. And I don't want to panic. Like, I've had an open P&L of negative 3,000. Negative 3,000 on a 10,000. That's a 30% drawdown. If I panicked and closed it, I wouldn't have made any money. I would have just basically just said, okay, I'm an idiot. I can't do this. I'm out. That's it. I'm out. Done. Game over. But because I knew the plan works, because I knew that the market recovers, it's just a matter of time. Because I knew that all I needed to do was let the actual strategy work out, to give it time to do its thing, to let the numbers play out. I was totally fine with it. Okay, it's 9:51 a.m. negative 40 Canadian. Nothing else to do. Just click like, subscribe, and just put a message down there saying, hey, thank you for the advice. You guys are great, and don't worry about it. Losses are okay too. Bye for now.